course, it's a record year. It's November, and so, of course, we're looking at a record year in terms of cash calls. And this, of course, is a sharp contrast to 2011, where we saw no fundraising or cash calls on the bourse. What shifted in sentiment? Was it the fact that we had so many postponements last year to this year? The environment was a lot more conducive. Why the sharp contrast between 2011 and 2012?
Yes, thank you. I think it's one of timing. I think that a lot of institutions had it in their strategic plans to raise capital. I think these plans started last year, and also, of course, interest rates in this market started dropping, this year after the second quarter. So I think that the planning had started. The execution was not going to happen in the first quarter or second quarter, largely simply because of interest rates. And third, of course, is generally in our market we do reporting accountant reports, which need to be part of the information memorandum, which means that between the time of the reporting accountant report, the timing and the opening of the offer, there's a 3-month window. So we think that a lot of companies really wanted to use their full year financials for the year ending 2011 as much as possible. We also believe that obviously there were other needs. Obviously there's needs for, we think, more driven by competition. I think competition is becoming more severe in the banking industry. As a result, stronger equity capitalized balance sheets will go a much longer way, obviously, in meeting those strategic plans. Of course, we've talked about regional expansion, the fact that a number of these banks are going regional, and they need to feed capital to these regional institutions. And you know why they're going regional. This is all about risk diversification away from the Kenyan market.
Yeah. I mean, Amish, you talk about, sorry, if you want to just go on about compliance, and we'll get into the individual rights issues. Yeah,
I think compliance issues, yes, but not sort of drastic sort of compliance issues, really. This is really something that may be anticipated because of new regulations coming through, but these regulations were going to take time anyway to pan out. But it appears that this is more driven by international standards as well. So it's quite interesting that a number of institutions are looking at compliance requirements as well.
Yeah, of course, when you're talking about the banks, because we definitely have seen the cash calls skewed towards the banks, but on average, 18.7% oversubscription. Any of the individual cash calls that really stand out for you in terms of the success of them?
Well, I think hats off to Kenya Airways. I think they came at a very they came at a very tough time. They came in the early part of the year in 2012. Remember, they have a year end which is different from other banks. They don't have a year end of December. They came in to kick off this entire cash call momentum, and it was tough going. They had a tough story out there, but in the end their two top shareholders prevailed, as well as other investors, and although they were undersubscribed, they still did a good job with 14.5 billion shillings.
Do you think that the cash calls have brought on a new type of investor to the Nairobi Stock Exchange, diversified the investor base?
Well, it's interesting because we have two ways of introducing new investors. One was trading of rights. In our market this year, for example, we again haven't had that much success in trading of rights. We feel that we still have a lot more to do in terms of education in trading of rights. And the second one we did introduce in this capital markets this year within the region is the issue of the rump form. So we did introduce that in Kenya Airways. We did introduce it in Diamond Trust Bank, and that was a new concept of how to bring in new investors. However, we think that there were new investors, but they did come through trading of rights.
And of course, you know, does the success of 2012 lay the platform for further cash calls going into 2013? Do you think there might be risk aversion as a result of the election? Or do you think that this has really proven that the NSE is a good place to raise funds?
Yes, that's the other reason for companies wishing to raise capital this year. We have another company that has just announced a public offer without listing. They're opening up in November and closing in quickly in December. So there obviously, to a certain degree, some companies realized that perhaps they would not be raising company cash call in the first quarter, perhaps next year. So yes, that could also be a reason why there have been much more issues this year. Remember, what you are seeing is only public listings. There have been a lot more private equity issues, private rights issues as well in this market this year. By the way, we are seeing companies starting the process for rights issues for next year now. We are already beginning to see that.
I mean, sorry, just talk about the almost competition, I would say, for the stock exchange from private equity deals and why people choose to go off the market. Do you think this is an issue that the NSE has addressed or is addressing, how to lure investors onto the market or lure companies to list on the market as opposed to going the private equity capital raising route?
In this market today, we have a two-tier market. We have a one-tier. The first tier market is, of course, the public market, where you obviously would realize that the price-earnings ratios, the price-to-book ratios, the EBITDA multiples are much lower. As a result, there is a second-tier market that has developed where companies are preferring to raise capital outside of listing through different types of offers directly to private equity and to other investors. This is because they are getting much higher valuations for their business.